Thank you for joining us at XM.com for today's market comment by Raf Boyajian. I'm Cristina Marujos. Trading got off to a cautious start on Monday as investors awaited fresh clues on inflation and the Fed policy path in what looks set to be a more eventful week following the Thanksgiving lull. Although Fed rate cut expectations have been scaled back slightly, there is a very strong market consensus that not just the Fed, but other major central banks too will begin slashing rates by the middle of next year. That poses a bit of a threat to the current bullish wave gripping risk assets, as the positive outlook is being almost entirely propped up by the expectation of lower borrowing costs amid weakening growth in the major economies. The US dollar has been the hardest hit from the rate cut bets, as the Fed has tightened more than other central banks, and with inflation now falling faster as well, it's seen to be cutting more. The problem with that narrative, however, is that inflation still has some way to go before it's settled near 2% sustainably, and Fed policymakers that are lined up to speak this week will probably try to get that message across. However, investors might ignore any pushbacks against rate cuts if the incoming data continues to support the case of looser monetary policy in 2024. The core PCE price index, which will be the week's biggest highlight, is expected to point to a further moderation in the Fed's favorite inflation metric to 3.5% in October. The dollar remained under pressure on Monday, edging lower against all of its major rivals, even as Treasury yields ticked up slightly. With the dollar still on the back foot, the pound, Aussie, Kiwi, and the Swiss franc advanced to multi-month highs, while the euro was testing last week's peak of $109.64. Oil prices, however, slid again as investors maintained their downbeat view on the demand outlook, even as the major producers are expected to announce an extension of the latest round of production cuts into 2024. The delayed OPEC Plus decision is due on Thursday, and while steeper cuts cannot be ruled out, markets see these disagreements that led to the postponement of the meeting as a sign that there is no appetite for it. This was today's market comment here at XM.com. Have a great week.